What a week for equity markets we are in for. It's Monday morning and it promises to be amongst the most eventful weeks in recent times. Hello and welcome to the trade setup right here on BloombergQuint Live. I'm Neeraj Shah. And I'm not putting out what the US markets did because that move is inconsequential, to be honest. I mean, we can bring it up. They were marginally lower in Friday's session, but hardly any impact thereof. The key is what's happening in Asia, what's happening to Dow futures, and what's happening to SGX Nifty, because those are the talking points this morning. So this is what Asia is doing, marginally higher for most of the Asian bourses. And if you look at what the SGX Nifty is doing, that too is trading with a mild bit of green on the screen. And this is despite a set of news. This is the mild bit of green that I was talking about. It was actually higher, currently just about 10 points, so flattish. But the Dow futures are trading with a bit of red, bogged down by the UK lockdown verdict. Now, what is to be watched out this week? And why did I say that it's the most eventful week? One, I think global markets' reactions to lockdown 2.0, I'm calling it that. This is my own terminology, but the new lockdown that has been introduced in UK, the US election verdict impact, and that will certainly be the big daddy. And towards the end of the trade setup, for the next 3 days, towards the end of the trade setup, I'm going to repeat the US election verdict and the scenarios and the impact that are likely to have on the markets. So keep that in mind. And heavy results calendar in India. That is the other key thing. It's a very, very busy season, busy week for results in the Nifty and the mid-cap space. So you've got to watch out for all of that. Now, the trade setup for the day today, as I said, the SGX Nifty is in the green, but the Dow futures are marginally in the red. And Nifty's outperformed global markets last week. We were in the green, while the US markets, for example, was down about 3.5%. So we've outperformed the markets quite significantly, led predominantly by banking stocks like Kotak Bank. Can that continue? Well, difficult to say that. The near-term impact on the sentiment because of the UK news is likely to be short. But if it stays, it will be impactful. So it will be a sharp jabs, if you will, might come back. I just think it gets dwarfed under the fact that it's a busy week in the US because of the US presidential elections. There's also a Fed meet. It gets dwarfed again because of the election verdict, but there's a Fed meet as well later this week. So it's an interesting week, really. And the thing that all of us need to watch out for is that the fear gauges. I mean, the market is greed and fear, right? So the fear gauges, the dollar index is now close to 94. India Vix has inched higher, so volatility is certainly on the upside. And today too, while we're seeing the markets being in the green, don't bank all your bucks. In fact, it might be better not to trade too much in this busy season, this busy week. Maybe just wait for the event to pass and then trade, because you do not know what the impact of the volatility would be. Now, I'll get to that in a bit. Also, you got to keep in mind, viewers, I'm not mentioned it, but just keep in mind, from an Indian market watcher's perspective, the news flow is not all that bad, considering that even the GST collection news that has come out, I mean, in October, I think it's just unbelievable that we've got 1.05 lakh crores, right? It's just quite stellar, the way the GST collections and the economics indicators seem to be bouncing back. So for India, there is a bit of positive news to munch upon as well. What about results? And some of the results are good. I'll get to them. But first, we'll watch out for HDFC, NTPC, and Z Entertainment, until recently a Nifty stock. So these are the key large cap names, and there are a few other mid caps which will be interesting to monitor. What about stocks which will react to results and some news flow? I'm starting off with auto sales because, quite frankly, those were stellar for select companies. They were really, really good. So Maruti Suzuki, I think, stands out. The total sales were up about 18.9%, not 8.9%. The domestic sales were up 19.8% at 1.72 lakh crores. So pardon this error, but extremely strong show by Maruti Suzuki. Buoyant numbers. It stands out really amongst the four-wheeler companies. Hyundai too had a good number, highest monthly sales, but the percentage growth wasn't nowhere close to Maruti. So great four-wheeler numbers by Maruti and amazing two-wheeler numbers by Hero MotoCorp. The total sales up 35%. I mean, can you believe that? 35% growth in what we call a post-COVID world is quite stunning, really. This is the highest ever monthly sales of 8 lakh units for Hero MotoCorp. It's just quite stunning what Hero MotoCorp has done, really. And I think people will take heart from this. So I don't know about the other stocks in the auto space. Tractor companies didn't have the best of numbers, for example, but I would think that both Maruti and Hero MotoCorp in particular will do well. The trick, viewers, is now for you to go back and try and figure out which are the ancillaries which supply to Hero, which supply to Maruti, which supply to Hyundai, and all of those could well be in focus. So watch out and do your research on the auto ancillaries, because if Hero is doing 8 lakhs units, yes, they are benefiting, but if that is in the price, you could benefit by researching into companies which supply to Hero MotoCorp. That's the key that you got to monitor. Then Reliance Industries, and the numbers are well known, so I won't get into the minutiae, but a few things that stood out. I mean, I thought that the weak refining was offset by petchem and consumer businesses, so I think those have come back. GO2 did reasonably okay compared to refining, so that's one thing. A lower interest costs and near zero taxes aided the bottom line. I mean, if you're looking at the bottom line number and thinking it's such been a great one, I mean, one of that factor is zero taxes. But of course, it's money in the bank, and therefore you should appreciate. And the fact that the interest costs have come down quite dramatically for Reliance will continue to aid Reliance Industries in the quarters ahead. In fact, the management, I think, in some fashion said that they expect further decline in the interest costs. So that's the first one. And the company's also indicated the Reliance retail activity is near pre-COVID levels now. And that augurs well for the sentiment around Reliance retail as well. Now, viewers, keep in mind, the reason why Reliance is important, and I have this alert here, the reason why Reliance is important today is not because of just the fact that it had a good quarter, but the fact that it's had a good quarter while the stock has underperformed the Nifty quite massively. Since mid-September, Reliance has underperformed the Nifty by nearly 13%. So it's a stock that's gone south. The numbers actually have been good. I couldn't find too many faults with the numbers, and therefore there could be a case for maybe some bit of reversal for Reliance Industries. This is the math that I was talking about. Look at the Reliance chart, and then if you ever compare it to the Nifty chart, you will get a sense. So, well, watch out for Reliance. That could be a bit of a support today as well. The one set of numbers that I thought stood out for me were Relaxo Footwear. They've beaten estimates across all line items. So I'm just bringing you the actual numbers. The revenues were down 7% to 576 crores. The estimated numbers were way lower. Net profit at 75 crores, the estimated numbers way lower. EBITDA margins 21%. Margins came in at 22% versus 16.8%. On all counts, Relaxo beat estimates. The company in quarter two has witnessed a pickup in demand in quarter two with the easing of COVID-led restrictions, and the operations for Relaxo are almost at pre-COVID levels. So watch out for this one. It's not a cheap stock, but could do well. And by the way, viewers, amongst other stocks, watch out for Motilal Oswal. They came out with a really good set of numbers. The stock has not rallied too much in the last 5 days. Might have a reaction, so do watch out. And lastly, Future Retail. Amazon has asked for over 1,400 crores in damages in tussle with the group. So therefore, I think this stock and all the Future Group stocks might have a slightly iffy day today. Now, as promised, last but not the least, this is something that I'm doing today. I will do tomorrow and possibly do on Wednesday as well. But this is the long and short from a market's perspective of the US election verdict this week. What will help the markets? Well, I think a landslide victory for Joe Biden, Democrats keeping control of the House, and Democrats also gaining control of the Senate. So Democrats already have control over the House, which is in our parlance, Lok Sabha, Rajya Sabha, 2 houses in addition to being the prime minister. Now let's stick with that plate. So in our parlance, upper house, lower house, in that fashion, Democrats already have control of the House. If they keep control of the House, which is one of the chambers, and then also gain control of the Senate, and if there is a landslide victory for Joe Biden, that's a blowout result for the market. So equity markets in all probability will rally if this happens. What the markets won't like is a split verdict. So if Joe Biden wins, but Republicans gain control of the Senate, and if Trump wins in the unlikely scenario, but Democrats have majority in both the chambers, that is the problem. Democrats, as I said, already have control of the House. If they win the Senate, and if Donald Trump wins, that is also something that the markets may not like. But maybe the markets will still be okay with, as compared to the last thing, which is a very close election verdict. and is challenged in the courts. Now, the fear is that if the election verdict is close and if Joe Biden wins, and if Donald Trump goes out and challenges that verdict in the courts, now that is something that will cause near-term issues for the equity markets. So, which is why I'm saying that it might be safer idea not to trade too heavily this week, because come Wednesday, when the verdict is out and if there is uncertainty, then there might be some really sharp near-term cracks for equity markets, world markets. And if that happens, India won't be far behind, never mind the GST collections and the auto sales, to be honest. So just be mindful of that. I'll repeat this tomorrow as well for all our viewers who will join in, because this is arguably the most important event in the last 4 years, or maybe next to the Indian elections, the most important event for India in the last 4 years. And we have to be mindful of that. Thanks so much for tuning into the Trade Setup today.